Good evening, Internet world. Dave Huber here for Tradeway, and it is time for Market Monday. Blair Nightingale is out. He's a little bit sick. Please keep him in your prayers. Today, we're going to talk about what's going on in the market. Why are we seeing the price action that we're seeing? What is the news out there, and what does it mean? And so let's get right into it. I'm going to share my screen here, and I'm going to pull up Yahoo Finance. The reason why we use Yahoo Finance is we want you to be able to just access the same kind of news that our company uses as well. And really, you can do a paid service and you can do paid like articles and things of that nature, but you're going to find all the same stuff on Yahoo Finance. Some of the writing isn't nearly as good. It's certainly biased in a lot of ways. However, the information is really what you're after. You're just looking out for specific types of information. You don't really need to look into what is Yahoo Finance's opinion. We don't care what other people's opinions are. We do our own research and we look into what's going on in the market. So we will teach you how to do that here at Tradeway as well. So if you have not been a part of Tradeway's educational programs, you might want to check it out if you want to learn how to do what we're doing. Let's take a look at some of the news that's out there. Big headlines, stocks jump, kicking off big earnings week with a bang. Anytime you have an earnings week, stocks are going to try and inflate a little bit. They're going to start to go up slightly. The reason is that everybody gets excited about earnings. They all think, okay, well, you've got a lower overhead since COVID. People have really reduced the amount of overhead that they have in their businesses. You have large cash infusions in the market, so liquidity is through the roof. So businesses obviously should be doing well because of all that. So there's a lot of anticipation going into an earnings week. So you'll often see stocks begin to climb. What's interesting is if you'll look at the charts, look right here. I'm going to kind of zoom in just a tad. Notice how the charts went up at the very beginning of the day, and then they just tapered off sideways. What's going on there? Well, as it turns out, news is not really that great. We are really starting to see the economic underpinnings get shaken a little bit, and we're starting to see that we're actually headed towards a recession. We've known it all along. The Federal Reserve, the news media out there, they've all been trying to kind of keep this thing afloat for as long as they can. Lots of talk about soft landings. Don't worry, we're going to be just fine. All the while, they're doing the very things that will bring on a recession. You say, Dave, what are those things? Well, one of those things is raising interest rates. Well, don't they have to raise interest rates? Yes, absolutely. What we have to begin to do is we have to look at these types of scenarios as not necessarily bad or good, just different. So when we get into a recessionary period, that's not a bad thing. I know the world paints it as bad, and there are certainly some bad consequences that can come with a recession. Obviously, unemployment going up, people losing their jobs, the amount of money that you can save tends to go down. It's a very difficult time, but those difficult times are actually working to accomplish something very important in our economy. You say, well, what is that thing that's very important? Well, part of what's going on is we are beginning to try and turn the tide on inflation. You know what inflation is. You're no stranger to it. You're paying more for gas. You're paying more for groceries. Everything costs more now than it did just 5 years ago, 10 years ago, 15 years ago. You can look at the price differences and they're astronomically different. So you say, well, okay, what does that mean? Well, that means it's becoming harder and harder for you to make ends meet on your current salary. Some people pick up second jobs. Sometimes they pick up third jobs. Sometimes they really get a little bit panicked and they start doing what I would call like panic investing. Let's go put all our money, bet it all on black on the stock market and hope that we hit it big with AI, right? We don't want to see that happen with our students. We want to make sure that they have a game plan and that they're not just flying by the seat of their pants. So we're going to teach you a little bit about what to expect with the kind of news that's coming out. So let's take a look. Stocks jump, kicking off big earnings week. Obviously, with earnings coming up, there's a little bit of happiness in the market, a little bit of anticipation. Maybe things will be better now. However, the chart is telling a different story. There's a jump at the very beginning of the day, and then it just tapers off throughout the day. That in and of itself is a story. I'm going to go ahead and click on the S&P 500, and we're going to look at it on kind of a larger chart here. Take a look at how that just went up and then sideways. During this first hour of the trading day, that is what we call amateur hour. And this is when everybody who's an amateur and they don't really know much about the disciplines of stock trading or investing, they get up in the morning, they eat their Wheaties, they drink their coffee, they check the news, maybe look at their favorite stock newsletter, and whatever the newsletter says they should buy or whatever the newsletter says the stock market's going to do, they just believe it and they jump headlong into some sort of stock trade. So we often will see this kind of action, even if the market's going to crash. If it's the first hour of the trading day, we will often see this kind of buying action. And then we'll either get something going sideways when the pros get involved, or we'll see a crash. Now, sometimes, don't get me wrong, sometimes the amateurs do get it right. They jump the gun a little, but they get in just before the big boys get in as well. We're not seeing that happen in the market right now. So this is on a daily chart that you're seeing. That's what this is. I'm going to go ahead and go full screen, blow it up a little bit bigger. And we're going to go back and look at some news again here in just a second. But I want to make sure that we get a really good look at what is actually going on here. So I'm going to zoom us out just a tad. And we're still just on Yahoo Finance right now. If you want a much better charting software, you're going to want to check out Charts by Tradeway, which I'll pull up here in just a sec. In fact, I think I'll go ahead and do it because Yahoo Finance charts are just being a little bit ornery right now. So we'll just go ahead and pull up Charts by Tradeway. And we'll close this out. We'll go check out a chart. And we're going to go look at the S&P 500. Now, let me get rid of some of these lines here. I've been doing a little bit of looking around at possible horizontal price points. We want to take a look at what is the market doing right now. So I'm going to get rid of all the lines, and I'm going to just put in some new lines that are more current. Check this out. I'm going to use my Ray tool, and I'm going to go from the top right here and just follow the tops of the chart. Every time the candlesticks move up, then come back down. Every time they turn back down, I'm going to draw a line and just connect those dots. All right. Now I'm going to make a parallel line to this. And so we'll go just like that, make a parallel line, and we'll bump one straight down here so that we can see what's going on. Now, we have what's called a trend here. Once you have about 3 or more turns, then you can say you're in a trend. It's an early stage of a trend because we have a turn here, that's 2, and we're waiting to see, do we have a real third turn? But because of this double tap back here, I'm going to anticipate we may have a downturn in the market, especially since it's struggling around its 50-day moving average. That's a squiggly blue line right here. And so what we're seeing is the market is really meeting some resistance. Even though we're in an earnings season right now, we got an earnings week and people are kind of happy during earnings week, we are seeing that the chart is not really very up. This is more of a broad view. This isn't looking at the single day. This is zoomed out 6 months view to give us a broader picture of what's actually happening in the market. If we want to take a look at what happened today, there's that flat line that I showed you earlier on Yahoo Finance. You see how it went up for the first hour and then it just kind of went sideways. What that's telling me is that the amateurs drove the market up, and then we didn't get a whole lot of action from the institutional buyers and sellers. All right. So we just got a whole lot of sideways action here. If you look at the volume on this, the volume is not very significant. We'll go look at the 6-month chart again. Notice that the volume bar is very low. That's not the full volume bar. I suspect it'll come up a little higher than that by the end of today when it updates fully. But it's not high volume. This line down here is showing me average volume. I don't think we're going to even see above average. So that's going to be very important to recognize. The amateurs are the ones that drove it up today, and it didn't really sustain an up move. It kind of went up and then just went sideways. So let's go back, look at some news again. I'll just open a new tab here, go back at the Yahoo Finance. We'll take a look. Right down here, we've got, let's see. Obviously, Israel is big in the news right now. Unrest, let's talk about that for a second. Unrest in the Middle East, never a really good thing for the market. Oil prices you may end up seeing go up, especially because of the trouble with the Middle East. But that does not mean that the overall market's going to go up. In fact, one of the things that the market really likes is predictability. Long-term investors, the big boys on Wall Street, they love for it to be predictable. And so things like political gridlock, they like that because with political gridlock, there's not a lot of change. And if there's not a lot of change, it's very predictable to see what's going to happen in the market. When you have something like war, that can really, really play on the emotions of an investor. How bad is war going to get? Is war going to come to our soil, or is it going to stay over on their soil? These sort of things can create an unpredictability in the market that is really not good for the market as a whole. That's why we see such a sideways motion on a day like today. I mean, today it's Monday, right? Typically on Monday, we'd get a little bit more action than this. Now, granted, September, October, those aren't the best months for a lot of action in the market. September especially is low. Typically, you see a little bit of a uptick in the volume, a little bit of uptick in buying and selling in October. Not really seeing that as of yet. And there's a lot of waiting. There's a lot of waiting to see what's going on. What's going on here? Well, some other things to keep in mind. We are raising interest rates. We're not done raising interest rates. The Fed has not told us that we are done raising interest rates. The liberal media keeps telling us we're done raising interest rates. Oh, we can't keep raising them. This is going to be the last one. We're quite certain. Fed indicates that they're almost done raising rates, or that we're going to be more in a holding pattern than we are going to be in a raising pattern. The Fed has not told us any of that, right? Now, as we can progress forward and we see what is the Fed actually doing, what is the Fed actually saying, they're saying things like, well, we're not done. We have persistent inflation. Until we get to our 2% goal, we have to keep interest rates higher for longer. And these are the kinds of things that cause the market to go down, which is why, I'll pull the chart back up, we're seeing a slight motion down in the market right now. See, back in, let's zoom out a little bit. I'm going to zoom way out here. Back in 2022, we had a pretty healthy downtrend. This is because we began to really raise interest rates, and the market doesn't like that. You say, why not? Why didn't the market like that? Well, raising the interest rates is raising the cost of borrowing money. And if you raise the cost of borrowing money, it makes it harder for businesses to borrow money for expansion, for increasing of payroll. If you're wanting to hire a new employee, sometimes you want to take out a bit of a business loan to front the upfront cost before you see a return, especially like things in retail. Retail doesn't tend to have a return until the last quarter of the year. And so there's a whole lot that just kind of slows down in the economy when you start seeing interest rates being raised, because it's becoming harder and harder, or more expensive and more expensive to borrow money for business expansion. So anytime there is an outlook or an expectation that interest rates are going to continue to rise, or if they're going to stay elevated for an extended period of time, you tend to see the stock market going down. Right now, we're getting a little bit of that, and it's becoming more and more evident that we may be reaching what we call a capitulation period, where the market finally says, okay, I give up, and we have a full-on recession. When that happens, it's not going to be pretty, but it is going to be healthy for the market. We need a recession. We have a lot of overvalued stocks. We're seeing fewer and fewer good up trades in the stock market. And so in a recession, you might think, well, then why am I even looking at the stock market? Isn't that a terrible place to be during a recession? And the answer would be no, it really isn't a terrible place to be during a recession. In fact, there are millionaires made during a recession because in a recession, wealth is not destroyed. It is only moved from one set of hands to another. And if that's the case, you could be on the receiving end of that transfer of wealth. That happens during a recession. And so you've got to be prepared for it. You say, well, how do I get prepared for that? How can I put myself in a position to profit off a recession? This seems kind of surreal or somewhat too good to be true, even. Like, how can I possibly profit off a recession? I thought I'm supposed to buy low, sell high. Well, yeah, you want to buy low, sell high, but there are instruments for investing in the stock market that increase in value when stocks decrease in value. One of the things that we look at are put options. Now, put options are very similar to insurance for stocks. And if you think about what you do with insurance, you pay an insurance premium. And if you experience a loss, you have a large influx of money come into you, right? So like, let's say auto insurance, right? You buy a car, you buy insurance on that car, and then all of a sudden you have a wreck, right? So the value of the car may go down, but you have a large increase in your cash infusions that you get from your insurance premiums or from your insurance policy. So that can happen in the stock market. Even though the stocks go down, maybe a stock crashes, right? It gets in a car wreck and it just looks terrible and it's going down. You can actually receive a large cash infusion from insurance policies that you buy on these stocks. And it's a really cool thing. You don't even actually have to own the stock that you buy an insurance policy on. You say, well, that doesn't seem right. Is that okay? Is that kosher? It absolutely is. And there are ways that you can learn to do that. We'll teach you how to do that when you get into the stock trading education or the options trading education at Tradeway. So let's go back to the news. Let's see what else we can see in the news. I'm going to go to here. And let's just take a look. I'm going to zoom in just a little where we can see a little bit better. The IRS is cracking down on these high income earners. That's just marketing trying to get you to do certain things. A Supreme Court dispute over $15,000 IRS bill may be aimed at. I'm not really sure what that's going to be about. It says Charles and Kathleen Moore are about to have their day in Supreme Court over a $15,000 tax bill they contended is unconstitutional. Well, that's great, but it's more like a very narrow target market here. You may not be experiencing something like they're experiencing, but it might be fun to watch how their case turns out. And maybe the outcome of the case will open up an opportunity for you to receive some kind of tax burden relief or something. Who knows? It's a long shot though, right? So we got to wait and just see what happens there. That's not something that's going to just completely make the market capitulate. So we keep reading. Lululemon stock surges to highest level since 2021 on plans to join. I think that sounds like a merger. Oh no, join the S&P 500. Okay. So this is more stock specific, but that's a very interesting thing, of course. When a stock reaches new highs, typically that's pretty bullish, but it doesn't mean that it will continue bullish, especially with the overall market being a little bit shaky right now. And I want to see some stuff on AI. Here's something: AI brains precise predictions stun Wall Street. Well, that might be fun to watch, but it's probably just an ad to get you to sign up for a newsletter of some sort. Brain pinpoints where the market is going up to 87.4% accuracy 1 to 3 days before it happens. It is. They're trying to get you to purchase a service. Join free now. Did you see that? That popped up right before I clicked out of it. Schwab reveals its plan for Thinkorswim. That would be interesting if you're on the Thinkorswim platform. It's not going to move the market, but we have a lot of students who like to use the Thinkorswim platform. You may not have heard this or not, but Charles Schwab purchased TD Ameritrade, which owned the Thinkorswim platform. Thinkorswim's a pretty cool platform. One of the original virtual trading platforms created. U.S. stocks, Wall Street jumps 1% to kick off earnings season. Again, that's just, hey, we're in earnings season. We're excited about it. Let's keep reading, see if we get anything on interest rates. If the economy is so strong, why are consumer stocks tanking? We may see something about interest rates here. So let's see. We're going to jump right in here. More than 24 stocks in the consumer staples and discretionary sectors of the S&P 500 have set new 52-week lows in October. Yikes. All right, well, let's see. Wall Street Journal, they're going to try and get me to pay to read this, aren't they? Well, we can find more articles as we continue to read through Yahoo, because the same stuff, if it's real and if it's big news, we're going to find it on Yahoo Finance. If you have a subscription to the Wall Street Journal, feel free to read that. It's kind of a shortcut because it's already up there at the top. They tend to put the ones that you have to pay for at the top. That's how Yahoo is able to pay for some of their services, because they sell advertising. U.S. stocks open higher as investors weigh New York's Fed's Empire State Factory Gauge. Monitor Israel-Hamas war. There it is. All right. So there's the big news, is that people they're worried about war right now. And so let's see if this is one we got to pay for, or if it'll allow us to read it. Even just the headlines. There it is. It's right back to Wall Street. Even just the headlines are going to pretty much tell you what's going on. Typically, when you get into an article where you're having to pay for the article, you'll often get some kind of bias along with that pay. Let's see what this says. ExxonMobil $60 billion Pioneer deal signals era of extreme consolidation for the oil industry. Interesting. The oil industry is, I mean, what you're seeing is you're going to see a lot of the big players start buying out the little players. When we shut off all of our oil drilling here in America, we were energy independent, and we shut it off as soon as we had Biden in office. One of the first things he did was he just shut off the oil, started buying from, believe it or not, Iran, a lot of the countries that are currently thinking about attacking Israel. We're enriching our enemies is what we're doing. But the reason why they do that kind of stuff is that it lines pockets, guys. There's a lot of pockets to be lined out there. And when we were energy independent, you had a whole lot of new players go, hey, deregulation, it's not going to cost me millions of dollars to start an oil company. We had a lot of new players out there. Shale oil drilling, horizontal drilling was a big thing. And all of a sudden, lots of new players. We really unleashed the American economy and the idea of free and fair competition, especially in the oil industry. And so a lot of new players came on the scene. Well, as soon as that got shut off, regulations were spiked, and all of a sudden it becomes too expensive if you're a small player in the oil industry. What happens is you see a lot of the small players get in financial trouble. And so then you see a lot of the big players come in and swoop up those little players, and we're right back to very monopolistic type practices. It's not an easy industry to break into, guys. And my family has been in this industry, in the oil industry, for 5 generations now, something like that. And so let me tell you, we understand just how hard it is to break in, because we've been in it for a long time. We unleashed the American economy and allowed a lot of new players to get into that industry, which is, in my opinion, even though that's competition for my family, I think it's a good, healthy thing for the American economy. And we shut it off when Biden got into office. So now you're seeing a lot of absorbing of those smaller companies. Warren Buffett's deputy says 1 million people want to be as successful as his boss. Don't really care about that. Here we go. Investing in bonds, a new day for fixed income. Here's what I'm looking for, because we're going to keep seeing higher interest rates. Check this out. In 2022, the Federal Reserve embarked on its most aggressive interest rate hiking cycle in a generation. Many fixed income sectors now offer attractive yield opportunities that haven't been seen in a decade or more, with income historically making up a significant portion of bonds' total returns. Today's higher yields may also help fixed income recapture its traditional role as a portfolio diversifier. What are we reading here? Well, guys, think of it like this. when there's uncertainty in the market and we're not really sure what to expect out of the companies out there, we tend to turn to debt instruments because they are considered safer investments. Well, when the yields on those debt instruments go up, right, and all of a sudden we see a lot more money being made in the bond market, that just makes the bond market more attractive in comparison to the stock market. So we see a lot of the institutional investors go, it's really uncertain what's going to happen in the market, especially with wars and rumors of wars. And I see that the yields and interest rates and in the bond market are going up. And I have an opportunity now to take my money out of this uncertain place, and put it into something that's a little bit more predictable. And what did I tell you earlier? The institutional investors love predictability. So they're going to pull out of the stocks. They're going to start shoving into the bonds. And the more and more you see them do that, here's what happens. You get this kind of domino effect because you get these really big players in the stock markets, these mutual fund companies and these hedge fund companies and all of these retirement industries. They have all of our retirement monies, right? All of your parents, your grandparents' retirement funds. They take that money and they go, all right, we're going to move out of the stocks. We're going to start moving into the bonds. And when big money pulls out of stocks, now the stocks get really hammered. So then other big money starts to really feel it. And they go, I don't want to be in this stock while it's getting hammered. Let's pull out. And they get this kind of domino effect. Big boys sell, more big boys sell. All of a sudden, everybody follows suit. You have a recession. They put that money over into the bond market. Now, eventually, what we'll see is after all of that occurs and we continue to raise interest rates, eventually, because fewer people are working with companies going out of business, and the value of your dollar will end up going up because we're raising interest rates. The value of the dollar will begin to rise again. That's the opposite of inflation. What that means is all of a sudden you'll see people who've been saving a little bit of money, right? And they've stockpiled a little bit for hard times, and they don't have jobs. And the Federal Reserve will come in and begin to try and get people to spend their money. And what they'll do is they will say, okay, let's lower the interest rates. When you start seeing things like, hey, we're going to start lowering interest rates, don't believe the news articles that say the Fed's going to do it next year. Listen to the Fed itself. Watch to see what Fed Chair Jerome Powell says. If he says, we are confident that it's time to begin an interest rate, what he would call it is a loosening of the policy, because we've been doing what's called tightening. What we're going to do is when we hear him start using words like we're going to start loosening policy or we're going to start lowering interest rates, when he says things like that, what that will do is it will make it easier for businesses to borrow money, which means then they can start hiring people. And all these people who have money from saving because they were saving up for hard times, they'll start saying, well, I need to get a job again because I'm going through some of my savings. I'm going to go get a job. So they'll go get a job, but their money is still valuable because of the interest rates being as high as they've been. So what happens is as they lower the interest rates, now people go back to work, but they also have a little bit of a nest egg and they start spending their money again. When that happens, you'll have a new bull market. When you have a new bull market, then it will be time to start jumping into stocks again. So if you're going, hey, is now a good time to jump into stocks? Nope. The big boys are telling you with their action, even just today. So let's go look at today again. The big boys are showing you, like, at least today, they're not jumping in. You had some amateurs get in at the very beginning, and then the big boys just waited and watched as the amateurs bought and sold all day long. Very low trading volume for the day. Not a whole lot happening. We want to wait and see what's happening with these earnings announcements. Is earnings season going to turn out to be really good? If so, maybe you get a little uptick in the market from some of the big boys. But guys, we still have war in Israel. That's a huge, huge thing. Pray for Israel, by the way. Stand with Israel. They are our allies. They have been our allies for a very long time. We were the first country, by the way, in 1948 to recognize them as a sovereign nation again after the Holocaust. President Truman did that, and I believe that was a very good thing to do. The Bible says, I will bless those who bless you, and I will curse those who curse you. If you hear someone say that Israel is not the same Israel as it was in the Bible, you're absolutely wrong. Scripture tells us they are absolutely wrong. I'm sorry if they tell you that. Scripture tells us that God will preserve that nation, and they have a future. Like, they will not be destroyed. It may look like they're going to be destroyed, but God will save them. Why am I telling you all this? Well, we have lots of news and we have lots of propaganda in that news. And this news is going to be designed to make you fearful, make you buy when you shouldn't buy and sell when you shouldn't sell. They are going to try to transfer the wealth from your pockets to their pockets. And so you need to understand what's real and what's not. And one thing I can tell you is real, that is God's holy word. And the Bible has never been wrong. And when it says that he will preserve that nation until the end times, until the latter days, guys, you can take that to the bank. And so we look to Israel. We pray for Israel. We will bless Israel because that is where the blessings come from the Lord. Because when you bless his people, he blesses you as well. You go, well, the true Israel now is the church. I don't disagree. Like, the church enjoys an amazing relationship with Jesus Christ this side of the cross. And it's a relationship that the Jews, many of them, don't have that yet. But the scripture also tells us that they will have that they will look to that. And guess what? They've already begun revisiting this man named Jesus Christ. For the last couple of years, many rabbis have been looking at Jesus Christ and going, we need to revisit this person and we need to have serious discussions about him. That's huge, guys. So be praying for Israel. They are our allies. They've been one of our best allies since the 1940s, or even a little bit sooner, earlier than that. And guys, we need to be praying for them. So you have war in Israel. That's going to create a lot of uncertainty, which is going to create some volatility in the market. You're going to see some market jumps and some market crashes. Sometimes you'll just see people wait and they're a little bit scared to do anything. That's what we saw today. But at the same time, even while we have this unrest in the Middle East, we also have interest rates higher, longer. With interest rates higher and longer, even though we have earnings announcements coming up, and many of those earnings may be pretty good, those interest rates being higher and longer spell long-term disaster for the economy as a whole. And so let's be watching. Let's not just jump into a whole bunch of stocks. We're going to take one more look at this from a broader perspective. Even if you're thinking, I want to do some up plays, it would be wise, it would be prudent to wait until you see the market just kind of come down off of this resistance line and let it hit this bottom line, this support line. When it hits that, if it tries to bounce up, maybe you have an opportunity to do some up plays. But until then, I wouldn't risk it. I'd be waiting. Now, we are above the 50-day moving average. It did close above the 50-day moving average. That could be significant, but we have to wait and see, will it sustain that move above that average? If so, we may see it move to a 20-day moving average. In fact, let's go like this. Let's go put up a 50, a 20, and a 10. Oh, we're still above the 10, the 20. And now actually, when you're looking at an exponential moving average, we're actually on the 50-day. We're not above it. We're on it. So there's a good chance we're going to see it bounce down from that 50-day. And that does spell disaster. There's a whole lot of bearish indicators right now. So if you've been in up trades, one thing you might consider is take some profits. I mean, you've had a good little move up in the last week. Might be a great time to take some profit and run, be on the sidelines a little bit, or consider if this does bounce down and we see it move below these 10 and 20-day moving averages, might be a great time for some of those put plays where you can profit off a down move. So anyway, guys, that's a little bit of an update on what's going on in the market today. Israel, big news, and interest rates, still the big news. Those are kind of the two driving forces right now. We are in an earnings season, which could be why we saw some of this up move here over the past week. If that was perplexing you with all the bad news out there, yeah, you know why. Earnings seasons tend to do that. But now that we're up around resistance, there's a good chance we'll see it come back down. I would suspect tomorrow we'll get a little bit of either sideways motion, or we may just start seeing some of these medium-sized candlesticks start moving down. So be watching tomorrow. You may see some down movement in the market. I hope this has been enlightening for you. I hope you've enjoyed it. Thanks for being a part of Market Monday. We'll see you again next week. Don't forget about Tip Tuesday tomorrow with Jeffrey Nance. I believe he's the one doing Tip Tuesday. You'll have me again on Wednesday for Word Wednesday. We'll break open God's Word, do a Bible study together, and just work on the other parts of our lives as we work to build the trader so that we can build the trading. And I really appreciate you guys being on here and being a part of this with us. Kelly, thanks for joining us from YouTube. Jess Ray, thanks for being on with us. And thank you, and God bless you as well. I see you guys. Appreciate the comments. Drop a comment in the comment section. Don't forget to like, subscribe, do all the notification bells and everything, the social media stuff, because when you do that, it's going to share this with more people. Thanks again for being a part of this. We'll see you next week. And then we'll see you in the market.